Hey, everyone. It is Ashley and Bill for your first mortgage moment of 2024. Happy New Year, Bill. How are you?
I'm great. Happy New Year to you. I think everyone's excited to start kicking off 2024
Oh,
for sure.
absolutely. Absolutely. And in our world, at the end of 2023, we started hearing that the Fed was happy and that rates were going to come down. And I thought I should ask a question today. And I'm hearing, the Fed is reducing rates. Is what the Fed does, I think, relates to mortgage rates, but dumb it down for me. They're not one and the same, are they?
No, they're not. And you're right. They do. Mortgage rates do correlate with where the Fed's rates are at. Absolutely. But, in short, the federal interest rate is the rate on how the Federal Reserve regulates for banks to borrow money from each other. And they do that all the time. So they regulate these rates for banks to borrow money. And then that obviously affects for individuals as us short-term loans, which are, home equity lines of credit, credit card rates. Obviously, you can see car rates too, like that. So as the Fed was increasing these rates, it just costs more to borrow money. Mortgage rates are different a little bit because they're long-term rates. There's a 30-year, fixed program. So you're right. They're not one and the same, but as the Federal Reserve moved these rates up, it became more expensive to borrow money, and mortgage rates tend to follow right on cap. So the big reason they do that also is they want to slow the economy down. They're trying to, the economy was booming. More
Mhm.
people are spending money, which results in higher inflation, higher price for goods. So the key for the Federal Reserve, again, is make it more expensive to borrow money to hopefully slow the economy down so everything can kind of catch up. Like you said, yes, they've stopped, they've halted, no more raising, obviously dependent on data and stuff, but they're looking at some reductions in the rates coming up, which is great. Mortgage rates, they more go in line with inflation and unemployment. As inflation is high, and it's more expensive to buy stuff. Same thing with buying a house. It becomes more expensive from the mortgage rates, and they tend to follow. As inflation comes down, as it's starting to halt and has started to come down, as we see mortgage rates start to follow suit, it becomes a little bit more affordable to take out that mortgage. Unemployment, kind of the same pieces. Unemployment, this is the bad news is good news for mortgage rates, as we can slow employment because employment rate's been at the best it's been in a long time this past year. As it becomes higher, then they want to try to boom the economy and get it kicking back in, so mortgage rates come down a bit, so it can help entice people to get out there and continue to buy and keep the economy moving, especially with unemployment going up. So big question is, yes, federal rate mortgage rates, they are two big different things. They do work together in aspect, but so many more things drive the mortgage rates altogether. Okay.
Awesome. Thank you for kind of dumbing it down for me and everyone else that didn't have a lot of clarity on that. I'm feeling really optimistic about 2024. I think you are as well. For us in the market, what I'm seeing for my buyers is they're in a really unique position where they still have a lot of negotiation power. They're able to take advantage of that decline in rates, but they haven't declined so much that everybody is running to make a
Right.
purchase en masse. So my kind of parting thought, and I hope you'll agree with me and share the same sentiment of, guys, there's a very unique opportunity. So thank you again, Bill, for jumping on with me. I don't think I introduced us appropriately when we kicked off. I'm Ashley Tullis. I'm a real estate expert here in the Dripping Springs and Central Texas area. Bill Regline is my partner in money, and he can get you a loan not only in Texas, but a few other states as well. So if you have any questions about the money side of things or the real estate side of things, please don't hesitate to reach out. And we look forward to kicking off 2024 with you all. Bill, we'll see you next week.
Yes, Ashley. And one last thing for all the listeners, don't get caught on the sidelines, okay? Because as rates drop, more buyers come out there, okay? You're in a buyer's market, so just remember that it's an opportunity to take advantage. So again, thanks for having me on again, Ashley, and look forward to the new year.
Absolutely. All right, ma'am. We'll see you next week.
Bye.